So hi everyone, welcome back to a new video. Today let's talk about the stock market valued in gold. So as you can see, the S&P 500 is near all-time highs, between 2% to all-time high. So it doesn't look so bad. If we look at gold is all-time high and is in a parabolic uptrend since March 2024. So 1 year and 10 months since gold started its parabolic move up. So what happens when we divide the S&P 500 with gold? This chart is much more concerning for the stock market. As you can see, here we have a trend line where we have broken down only 3 times before in the history. The first time it was 1929, later 1973 and 2008. It meant that gold is outperforming the stock market. But let's see how gold outperformed the stock market. So gold went up and the stock market went down, or all the two assets went down, but gold in a smaller way. Let's have a look. So to this chart, first let's add the S&P 500 on a new price scale, make it logarithmic, and let's have a look what happened when in 1929 touched its trend line. It was at $32 and went down to $4.4, which means that this is a 93% drawdown. As you can see, when it broken down in 73, it wasn't that serious like in 1929. It's just a 55% drop. And let's analyze the 2008 data as well. It was a 58% drop after the S&P divided by gold chart broken down. So all the downsides. As in 1929, it was 93%. In 1973, it was 55%, and in 2008, it was 60%. About. So now remove the S&P and let's add gold. Gold, new price scale, make it logarithmic. as we have no reliable data for 1929. In 73, let's remove this. So in 73, it actually went up a bit and had a retest, so it went nowhere. In 08, it had a bit of a downside, as you can see. So from here to here, it was a 37% drawdown. So let's create a copy from this. These are gold downsides. For 1929 we had no reliable data. We had no downside in 73 and a 40% downside in 08. So we can analyze a bit better gold as well. You can see that in the long term gold went up to a new all-time high after the breakdown of this distribution in 1973 and in 08 as well. Currently this measure is sitting at 140, and in the short term I'm expecting for this measure that it will be lower in the long term, and also a consolidation phase for gold is needed. So in order to for gold to outperform the stock market has to drop more than gold. So thank you very much if you watched this video. If you liked it, please subscribe and have a nice day. See you soon. Bye bye.